Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja, and joining me on the show today is Shail Bhatnagar, our markets editor. Well, it's Diwali week, and bulls are on a roll on the Wall Street. But will the momentum sustain going forward? Well, we'll discuss this and much more. But first up, the top headlines for you. Indian stocks are likely to consolidate on Tuesday as traders digest a 3-day rally and work the math on valuations. Sentiment remains bullish on the Wall Street as the final week of festivities gets underway in the broader economy. Newer sectors and old favorites are coming back into the limelight on the Wall Street. The latest to join the rally are the pharma and the chemical space, as beaten down valuations attract investors and traders alike. Very good morning, Shell. It's a fresh Tuesday morning and it's Diwali week as well. And the start was solid yesterday. Sensex rallied around 595 points and Nifty also jumped 181 points to end at 19,412 level. And there was buying in key sectors, barring the PSU Bank. And Nifty, if you see, is up around 550 points from October 26th low of 18,857. So now I want to understand from you that where do you see Nifty and what should be the strategy?
Good morning, Tanya, and a very warm welcome to thousands of viewers who are now joining us from different parts of the world. Firstly, मंगलवार है तो सब कुछ मंगल ही होगा और given the momentum that we have in the market, let's see how things turn out. We have 3 fantastic days of a rally, Tanya, and the index yesterday, that is the Nifty, which is presented in the form of a chart for you, closed at its highest level in the day, 19,411. This is also a 3-week high for the index, the highest that we've seen in the November's expiry. Now, a lot of things have happened to contrive this situation which is there in the market. Chiefly, the global cues have been very, very positive, which is the quietening of crude oil, which is now back to 200 DMA. Gold futures have now subsided. And most importantly, the US 10-year yield is now in a downdraft. All this has put together a very nice global risk on trade, and Indian markets have been the biggest beneficiaries. You point out very rightly that it's a 550 point jump from the low of October 26th, which was 18,850, and yesterday the market has surged to its highest level, 19,411. So Tanya, after 3 days of intense rally on the long side, I think we are going to pause on Tuesday. A very sharp rally that we've seen from Wednesday onwards all the way to Monday morning will have to be digested by the market. So Tuesday is likely to be, a sideways to flat consolidating range. This is the Nifty in front of you, and what is really interesting is that the index has moved above its 20 DMA. And Tanya, in terms of sensibilities, in terms of technicalities and practicalities, the moment you are above 20 DMA, the mode and the tone of the market changes towards the bullish phase. I mean, it's the brave hearts that bring the index up to the 20 DMA level. As you can see, it almost tested the 200 DMA, and from 20 DMA upwards, it is the job of the aggressive bulls to take the index back to its all-time high, or maybe near it all-time high. So this is how the chart is structured, and what is rightly mentioned is that other sectors are joining the party. Look at pharma and chemical space yesterday. It is a surprising thing to note that yesterday's top traded stock future was actually Divi's Lab. More than 32,000 contracts were traded. So after the Nifty and the Bank Nifty, the most traded stock future yesterday was Divi's Lab. Yes, it came after a very sharp dip of 10 successive days, but that is how sectors come up. And the top traded counter was a chemical counter called Aarti Industries in terms of gains, 10% higher. So different parts of the market are now coming up in terms of presenting traders and opportunities to punt on the long side. And we have seen intense short covering in ITM Nifty calls, which means that, you know, 19,100, 19,200, 18,900, 19,300 calls. Aggressive short covering has happened by bears because they don't want to be caught on the wrong foot. This adds to the rally, this adds to the momentum. Yesterday evening we had seen 19,300, 19,400 calls doing fantastically well. So buy on dip as far as Nifty is concerned is going to work best for traders, but today is most likely to be a consolidating day. You are going to enjoy this 550 point rally that has happened, and you're going to digest it. Now in terms of the trading range, it's now shifting upwards. 19,300 to 19,500 is the trading range, and you were with us on last Wednesday when we had suggested buying into Nifty ETF and Bank Nifty ETFs. That has worked out beautifully, Tanya. Risk-free really money that has been made when the index was at a 4-month low, and now those people are also enjoying the bounce. Tanya.
Absolutely. People are enjoying the bounce. Right, very rightly said, Shell. And now let's discuss Bank Nifty as well. The trend there is also positive, and the good news is that we are getting good numbers from many large caps names. So look at SBI, look at Axis Bank, ICICI Bank. So, what are you looking now on Bank Nifty, and what are your fresh support and resistance levels?
So Tanya, the same thing has been repeated on Bank Nifty. The trend is positive. Yesterday, the Bank Nifty did the best thing. It overcame the 200 DMA by jumping above it. So at 43,620, which is up 301 points from the low of October 26th, which was again the lowest that we've seen since May. The index has rallied now close to 1500 points. So that is what has happened. You see these last 4 days that you've seen a very, very sharp bump up in prices, very sharp bump up in open interest, and that's how Bank Nifty is structured. The trend here again is very positive, and you have SBI's earnings, the charts of Axis Bank and ICICI Bank, and in the last 10 odd minutes of trade, it was HDFC Bank that also participated. So even Bank Nifty ended at its day's high 43,620, and I would imagine that this 1500 point uptick that you've seen will be digested today. Remember, we are on T-1 on Bank Nifty, which means tomorrow is the weekly expiry of November 8th, and most likely you are going to see muted trade for the next 2 days. Markets will need to digest it. Very, very strong chart action seen on Axis Bank and ICICI Bank, and the best possible chart is on Federal Bank, Tanya. So as far as supports and resistances are concerned, a very strong support at 43,500 as far as the Bank Nifty options chain is concerned, and 43,900, 44,000 are the immediate resistances for this index to overcome. Tanya.
Okay, absolutely got that. 43,900 and 44,000. These are the key levels. Keep an eye out on these levels. But talking about FNO space as well, Shell, lots happening there as well. And you started the FNO show yesterday. So what are you looking at in the FNO space today?
So Tanya, 2 or 3 things. You remember the 19,300 call that we caught at 103 yesterday. It went all the way up to 155. That trade we ended somewhere like 144, 145. 19,400 call is in action, and there are 3 stocks that we have discussed, which we will now also take up in the FNO part. They are in a decreasing order of importance. TCS, Mahindra and Mahindra, and of course Jindal Steel and Power. These are the 3 that have been beaten down pretty badly, and you'll see the charts in front of you, especially of TCS as well as Mahindra and Mahindra. We are looking at the 3,400 call on TCS, which was I think at 42.43 yesterday, and it went up sharply to about 45.47. So that is something that I am looking at on the long side. Mahindra and Mahindra, I think 1490 call is what we looked at, and that's how the structures are on the long side. Mahindra and Mahindra was trading at 1.1% higher, 1491. We caught the call of 1490. Let me just try and rustle out how they are at the moment in terms of prices. Mahindra and Mahindra, I'm sure the PCR will show that. So the 620 call on Jindal Steel and Power, 1490 call on Mahindra and Mahindra, and the 3400 call on TCS is what is there on my radar as far as data is concerned. And again, these are all technical parameters, all options trades. You need to get an independent view before you start looking at these trades financially. At the moment, they present an educational feature on Market Today, on Business Today television. Tanya.
Okay, absolutely got that. And let's discuss global markets as well, Shell. Our market guest, Mr. Dharmesh Kant, will be with us shortly. But meanwhile, let's discuss global markets. So Jerome Powell will be speaking twice this week. So it's an important week as far as global cues are concerned. And Wall Street extended its winning streak yesterday. Dow Jones that ended 0.1% higher at 34,095 odd level. Nasdaq also up around 0.3%, and S&P also is up around 0.18%. Oil prices that edged up on Monday. Brent crude futures, if you see, that rose 41 cents or 0.5% to $85.3 per barrel, and gold prices that slipped on Monday due to a slight uptick in the US bond yields. So, what is now essential to track from these overseas cues, Shell?
So Tanya, I'll add one more tinge and flavor to the three things that you mentioned: gold, crude, and US 10-year bond yield. Look at the dollar index. This was a pain in the proverbial as far as Nifty bulls and Indian bulls were concerned. The dollar chart is right there in front of you. It is at its lowest level since September 20th, and that is how you see a bit of a bullish fervor coming across the globe, whether it's Nikkei, whether it's the Hong Kong index, whether it's some part of Chinese markets or Australian markets or New Zealand markets, or of course our market. That's mainly because the strength of the dollar has abated, and this is what you see at the lowest level since September 20. So there is this lovely Goldilocks scenario happening, and it's coalesced beautifully with our festive season in the last week of Diwali, before Diwali on Sunday, and that's how markets are at the moment, Tanya. So all good things happening. मंगलवार है, मंगल होगा, कुर्सी की पेटी बांध लीजिए और तैयारी करिए अच्छी तेज़ी की. आज कंसोलिडेटिंग फेज़ है और एक दो दिन में आपको और बढ़िया तेज़ी आती हुई दिखेगी. तान्या.
बिल्कुल. तो चलिए, मंगलवार है, मंगल ही होगा शैल. Let's hope this. But what about sectors, Shell? Sectors, if we talk about any sectors that we should keep on our radar, that you are bullish on, and any sectors that we should avoid at this point in time.
I think chemicals, Tanya, after many months, almost 18 to 20 months, we've seen an initial spurt in prices, on stock prices. There's nothing that's changed fundamentally for the better. As far as the chemical space is concerned, dumping from China continues. There is no price action in terms of products being off-taken. The good point is that raw material costs are also down, but if there is no off-take in terms of higher finished good prices, then that the sector is not doing well fundamentally. But prices have come back to some extent. Aarti Industries had a turnover which was about 19 times its 5-day average, and the stock rose 10.5% higher. We discussed this yesterday in the morning trade. You've seen the overall chemicals picture. The price is up 3% as far as the F&O price, the F&O markets are concerned, and I'll let you know which are the top gainers in the chemical space. Aarti Industries, Deepak Nitrite, Atul, Naveen Fluorine, all 9 of them rose very sharply with an accompanied rise in open interest. So chemicals is looking good. Old favorites like Deepak Nitrite, Naveen Fluorine making a very strong comeback. SRF is one of the stocks that I'm looking at, but that's gauged as textiles and F&O, but a very strong traction coming in. And of course, pharma, the old favorite, is back and back with a bang. Look at how Divi's Lab came up, 10 days of continuous fall, and it was the top traded stock future yesterday, gaining about 4.5% at 35.18. Still, a very good swing trade in the making. The open interest rose about 4.7% here. The old favorites, Aurobindo Pharma, Glenmark, or Syngene, all these stocks will make a very, very sharp comeback based on open interest and of course volume and delivery data. Tanya.
Okay, absolutely. And what about the sectors one should stay away from?
uh, it's the Diwali week, Tanya. Let everybody enjoy the party and make the most of it. But sugar is coming back. Sugar is coming back with a vengeance. Balrampur Chini, Dhampur Sugar, Renuka Sugars, Andhra Sugar, the smaller ones, Bajaj Hindustan, Vishwaraj Sugar, all of them rose very sharply in yesterday's trade, and they made the most of it as far as the good fervor is concerned. मिठास आपको मिलती हुई दिख रही है दलाल स्ट्रीट में इस तेज़ी में चीनी की वजह से, तो आप देखिए बहुत बढ़िया मोमेंटम आपको यहाँ पर भी आता हुआ दिखेगा. 1 week rise on Bajaj Hindustan, as our PCR points out, is close to 35-36%, and that's how the structures are in the sugar space. Balrampur.
Since we are talking about all-time favorites, defense, railways, and PSUs, these stocks have also done pretty well. And I think we have Dharmesh with us now, and let's welcome him. We have Mr. Dharmesh Kant with us, who is the head of equity research at Cholamandalam Securities. Good morning, Mr. Kant. Always good to have you on BTTV. We were discussing questions and we were discussing market outlook, and bulls are on a roll on the Lal Street, if you see. But now the question is that will the momentum sustain going forward? Shail said that Mangalvar hai, Mangal hi hoga. But what about you? What are your thoughts?
Yeah, good morning, Tanya. Good morning, Shaili. I think till the time Diwali is on, and we will have a positive momentum going on in the market. The very fact that Diwali is an auspicious occasion for our country, and many people just deploy funds during this period, and they wait for deployment of fresh fund during this period from a year or 2 year perspective. So this liquidity inflow, which is coming in from the retail segment, HLI segment, will keep the momentum up. But yeah, I do have my doubts regarding the sustainability of this upside momentum post Diwali. So maybe it's a 6-7 days trading phenomena where the investment bets are being picked up, and that will keep the floor in place and some upside for the market. Post that, it will be more to do with the function of elections, how it is going to pan out, and other macro factors will step in.
Okay, and what about your Diwali picks, Mr. Kant? Would you like to share some Diwali picks ahead of Diwali with our viewers?
Yeah, sure. So what we have thought about while picking Diwali picks this time around, though the economic fundamentals and undercurrent is very strong, and we have seen pockets of strength in many other sectors, but having regard to the upcoming elections and the macro uncertainty on the geopolitical issue and global front, because lots of things are still unsettled. Though at this juncture, at this moment, they are looking pretty rosy. So what we have gone for is sustainability of profitability and revenue growth, though it may be less compared to high beta growth, but the growth is should be there, and consistency in the corporate governance and other aspects of visibility of further order inflows. So we have picked basically from the infra space, be it railway or defense. And Reliance Industries is one of the topics out there based on a conglomerate play. But the topic out there would be, to my mind, is Hindustan Aeronautics Limited, HAL. The stock is sweetly poised. There's a lot of defense foray happening, or almost 80,000 crores of order book they are sitting on, giving it a visibility of 3 times price to book ratio. The operating margins have been improving considerably. If you look at just the payables, I mean receivables, which was into March 2019 to 27 days, it has come down to 64 days. So the timely payment from Government of India is helping them out on the working capital basis. I mean, cash per share is 300 rupees, and that gives us sufficient elbow room for high dividend yield. At the same time, profitability CAGR is expected to be around 25 to 26% going forward from next 3 years. Light combat helicopters and light combat aircraft manufacturing capabilities is being stepped up from, I mean, they have planned for 26, 27, 24 aircrafts, which is likely to be 30 aircrafts by 2030 per annum. And that's a huge order. I mean, this is a huge capacity expansion and capabilities they are trying to build in. So I mean, it ticks all the boxes with an ROE of 27, 28 available at 19 times P multiple 1 year forward. Margin of safety is quite high and you can't go wrong on such quality stocks. So that's the topic out there. 20, 30% upside from a year's perspective is likely to be there. So that is one. Apart from that, we have RVNL, Reliance Industries, and Poonawalla FinCorp as our Diwali pick fundamental basket.
Okay, absolutely got that. And what are your thoughts on DV Laboratories, Mr. Khan? The company posted its numbers yesterday. 29% yearly decline in its net profit at 348 odd crore rupees, clearly missing the estimates. What are your thoughts?
See, Tanya, I don't know. I mean, a month back when we were discussing about the macro things, I have clearly pointed out that pharma is one space where we are not comfortable with, and I am expecting not a great set of numbers for most of the companies, and which we have seen. I mean, there are a couple of outliers out there, but generally, pharma is a space where you cannot expect a profit growth of more than 10, 12% under a normalized condition, and nothing wrong going out with the company if things are firing. But these companies are available at a PE multiple of say 25 to 30. So valuations have been re-rated far ahead of what the earning trajectory would look like. So that was a major concern. So for Divi's Laboratories, it has been a company which has been always surprising on the number front. And I mean, last 3, 4 years, the numbers have been quite erratic on a quarterly basis. So as a basket, we are negative on the pharma space. Even, I mean, there are stocks like Cipla or Sun Pharma which have done well. But we are not recommending them as a buy trade at all. There can be one or two outliers. I mean, Zydus Life is one stock which we are looking forward to. Today they will be reporting their earnings. Last quarter was exceptionally good. If that run rate is maintained, then there's a scope for an outlier trade in Zydus Life from the pharma space as a specialty drug producer on oncology and heart-related diseases. So that is one stock. Other than that, fairly negative on the entire pharma basket.
Right. And we have pre-open trades with us. The Nifty opening flat, down about 25 points initially, 19,403 in front of you. We are also joined by Akshay Bhagwat, Senior VP Derivatives Research, GM Financial Services. Welcome, Akshay. Just give me a couple of minutes to look at pre-open trades, and then I'll come to you as far as your top pick is concerned. Like I said, it's a bit of a downtick on the Nifty. This is going to be a consolidating day for the index today. Let's look at stocks within this space in the heavyweight sector. HDFC Bank 1529, 2.3% higher. This will change for the worse. Let's look at Reliance 2262, down 3.28%. This will improve for the better. These are all pre-open trades. They keep on changing at the drop of a hat. Let's look at Infosys, 1.15% negative, 1385. How about TCS? That is a stock that I'm interested in. Flat at about 3374. What we'll do is we'll let these prices get stabilized over the next few minutes and get Akshay into the conversation so far. The Nifty now up 40 points, 19,451. We'll pay attention to it, but getting Akshay into the conversation. Good morning, Akshay. Welcome. Your top pick for today.
Good morning, Shailji. Thanks for the invite on the show. Well, one good point in Nifty is 19,200 technical barrier has been successfully overcome. So that puts the market in a strong footing. The stock which I have on my radar for trading is Sun Pharma here, because if you look at the chart pattern, it's a very very promising chart pattern, and it is showing a good recovery signs above the breakdown levels which we saw before the results. So a positive setup in Sun Pharma just makes me believe that it is heading for a breakout above 1160 soon. So you can accumulate Sun Pharma in the range of 1140 to 1150. The breakout should target 1200 on the upside. The time frame would be around 15 trading sessions. Keep a stop loss at 1190 as a risk management, sorry, below 1090 as a risk management trade, and target the breakout. You should be seeing 1200 soon on Sun Pharma.
Any particular stock that catches your fancy for today's trade, Akshay?
For today's trade specifically, I would look at HDFC Bank. Now, HDFC Bank is kind of creating a support base at around 1416, 1480. A strong put writing activity has been noted at the money strike of 1500 in the derivative space. So I'm expecting a pullback in today's intraday session. So you can look at HDFC Bank. If it recovers, 1525 is what you can target for the day. 1460 is the support. So HDFC Bank would be a buy for day trading.
Okay, and Akshay, we are in this season of festivities and enjoying the bounce in Dalal Street, as also a very strong rally across exchanges. Anything that you would like to present as a Diwali gift to our investors and viewers, which over the next 6 months, 1 year, might give stellar returns on the long side?
Absolutely, Shailji. One stock which clearly comes to my mind when I look from a long-term perspective is Tata Motors. The chart structure is really strong here. It's just been in a kind of a consolidation, and time and again, the bumps which are happening, the recovery rallies are pretty good for short-term buying too. I believe this breakout is already on 600 support base has been set in. Tata Motors should be targeting around 900 with a time frame of 1 to 1.5 year. 900 to 1000 is where you can look at for Tata Motors. 646 is where it closed. So you can accumulate Tata Motors, a very strong chart structure, promising significant returns for 2023, 2024. So Tata Motors buy. In case you need a risk management stop loss, 525 would be a stop loss, but I believe the stock has only one way to go, that is up. So 900 to 1000 is where you target Tata Motors from a 1 year perspective.
Okay, absolutely. Got that. And Akshay, you mentioned Sun Pharma, but I want your thoughts on Divi's laboratories as well. The company posted its numbers yesterday. And if you see, we have seen a 29.5% decline yearly in its net profit at 348 odd crore rupees. So, what are your thoughts on Divi's lab? Because the numbers are, that missed the estimates. So, what do the technical charts suggest?
Good morning, Tanya. Well, for DV's lab, one thing which was prominent in yesterday's trade was unwinding in the futures and options space. So if you look at the chart structure, it was negative for the past few trading sessions, right from 3800 to 3300. There was a tremendous selling pressure in DV's lab. A lot of shorts were seen, and short covering above 3400 was probably the trigger from the derivatives segment, which saw a strong uptick in DV's lab. Now, does this change the chart pattern for DV's lab from medium term? The answer is still no. It's just a recovery rally which can at the best target 3550 to 3600. So yes, the momentum is up, and I mean, I'm still not very much sure about whether this rally would continue for 37 plus. As of now, I believe 34 is the base for DV's lab for short term, and 3600 can be the best case scenario if you're looking from a 3 to 4 trading session. So 34 and 36 is the range bound trajectory which I look for in DV's lab. I do not see any major directional bet as yet picking up in DV's lab.
Okay, absolutely. And Mr. Khan, coming to you for Tata Motors. Now, Akshay, according to Akshay, the target could be as high as 900 to 1000 rupees on Tata Motors. But what about you? I mean, what do the fundamentals suggest for this particular counter?
See, but Tata Motors is more of a JLR company right now, and the sales which they have been witnessing in Europe and China coupled with US is the main cornerstone for driving the profitability, which I think is likely to continue. But there are too many ifs and buts surrounding the higher interest rate trajectory prevailing in at least European and US economy and geography. So, how this run rate of JLR is likely to continue in the calendar year 24 is a bit of a question mark out there, and that is where headwinds for Tata Motors will play out. So far, it has been very good. I mean, the run rate on the vehicles sold has been really good. And the EV side, which was picking up in India, has not delivered to the extent it was desired or expected by most of the analysts and the company itself. So there's a drag out there. MSCV, they have been losing market share to Ashok Leyland and M&M. So that's a challenge again out there. So, I mean, putting everything into perspective, I think it's fairly priced as of now. Trading bounce of 10-15% may still happen. Margin, they are having the sweetest of the margin at this juncture. The expansion has already happened. From here on, further expansion is unlikely. Sustainability of this margin would be a challenge for Tata Motors, around 14% kind of an operating margin out there. Commodity prices so far has helped it to get this margin. Going forward, any uptick in commodity price will again be detrimental from the valuation perspective. So, to my mind, it's a wait and watch for next 6 months for Tata Motors, and then we'll take it from there. We are not recommending any fresh buy on it. At the same time, if somebody has bought it, it's a hold and stay long on the stock.
Okay, let's now pay attention to pre-open settling trades. The Nifty is likely to open flat, down 7 points in 19,404. That's what pre-open trades are indicating. A flat opening on Nifty Bank as well. Just I had said, this is going to be a consolidative day. Let's look at how prices have settled in the index heavyweight section. Okay, today's the day for Bajaj Finserv, 2.5% higher, 1602. HDFC Bank is flat, 1494. Nothing happening there. Reliance down 0.2%, 2334, and Infosys down flat about 2%, 0.2%, 1400. Let's look at what TCS is doing. TCS at the moment is again flat, 3378. So Bajaj Finserv is what we are looking at, and Bajaj Finance. Remember, it's Tuesday, it's the weekly expiry of FinNifty, and typically these two stocks and the entire NBFC space is what is active on the options side. Let's look at very quickly the FNO space in terms of gainers and losers in the pre-open trade. Apart from index heavyweights, I see Indian Oil Corporation 1% higher, 100 rupees. This is what Tanya had pointed out yesterday. This is a good trade in the making. We have a strong move coming in on Aditya Capital, 0.8% higher, 172.45. What about top losers? Aarti Industries profit booking 2% lower, 499. Divi's Lab again profit booking 2% lower, 34.35. Birla Soft 1.5% lower, profit booking 588. Let's look at the NSE 500. Cash counters are where you find tons of traders moving in. GSPL fertilizer stocks, Tanya, we had mentioned this yesterday as well. The top gainer in FNO, 4.5% higher, 285. You have Jamna Auto, 3.5% higher, 116. You have Quest post earnings, 439, 2.8% higher, and of course Nykaa 2.5% higher, 151. This is how the markets have opened in pre-open trades as far as prices are concerned. To you, Akshay, what looks good to you in the banking space? Very sharp moves coming in on Federal Bank yesterday, accompanied by a very sharp rise in fall in open interest because of short covering. Your view on Federal Bank?
Federal Bank, broadly, the chart structure is still strong. It is just that post result, if you look at the reaction of the stock, it's seen some bit of long unwinding from the 150 level. So it's recovered well from the levels of 138, 140, which is a strong support zone for Federal Bank. As you rightly said, there has been strong buying action in yesterday's trade, and I believe that 150 should soon be on the cards for Federal Bank. So maintain a buy on Federal Bank for trading, even from a medium-term perspective. I see the recent tops of 152 being taken over very soon, probably within the next 10 to 15 trading sessions. 140 is the support base. The immediate target, if you look at, would be around 150 to 152 in Federal Bank. So continue to hold, or you can even consider buying it fresh with a stop loss below 140.
Okay, and the other stock that was buzzing very well, which Tanya caught, was Bharat Forge. Akshay, to you, 1082, 4.5% higher, and an 8% uptick in open interest. What are the medium-term charts on Bharat Forge telling you?
Shailji, an absolutely strong chart price structure here for Bharat Forge. From it's recovered well from 1,000 level, a very strong pattern developing at the supports of 1,000 to 1,020 on the technical charts. I think from a medium term space, 1140, 1150, which was seen somewhere in the month of September 15th, should be on the cards within the next 10-15 trading sessions. So continue to hold, or I would still maintain a buy on Bharat Forge. Derivative space is also buzzing with long additions in this script in yesterday's trade specifically. So 1025 is a support base, and 1150 is what you should be targeting for in Bharat Forge.
Okay, that's the view coming in. We are waiting for about the next 2 minutes to for the opening to start. Like I said, it's going to be a consolidative day after 3 days of sustained rallies on the Nifty and the Bank Nifty. We are on the weekly expiry of Fin Nifty, T-1 on Bank Nifty, and of course the Nifty is showing signs of, how should I say, a nice consolidating rally that's likely to happen. Okay, let's look at other price points as far as prices are concerned. Akshay, to you, TCS, what are the charts telling you, and Mahindra? We have a very few seconds left. Let's just stick to one, TCS.
TCS, 3325 is a strong support base which TCS is setting up. I feel from a trading perspective, it qualifies as a buy on the charts. You should see a recovery soon in the IT space with probably TCS taking the lead. 3440 is where you can expect from a trading perspective with a week's time frame. So expecting a bounce or a recovery in TCS from the current levels. 3320 is your support, and 3340 is the target for TCS. 3440.
Okay, ladies and gentlemen, now it's the time to tighten your seat belts. We are just going to see opening ticks on the Nifty and the Bank Nifty. Remember, we started FNO as well, so keep an eye on 19400, 19300 call as far as the Nifty is concerned. The initial pre-open trades point to a slight weakness, which is fine. You've seen a 550 point rally on the Nifty since October 26th. Okay, prices are here. Nifty is opened 17 points lower, 19,390. The battle will be for 19,400. Okay, 43,500 is what we see on the Bank Nifty, 104 points lower. A red tick on Nifty IT and a red tick on Nifty 500. The Nifty is moving on the intraday charts below the pivot, which is 19,381. So this is all profit booking from all those traders who took the 19,300 and the 19,400 call on the last 15-20 minutes of trade. Remember, the index ended at its day's high. Let's pay attention to prices because it's the Fin Nifty expiry. Let's look at Bajaj Finance immediately. 75.77, 0.2% higher. Let's look at Reliance now. Flat 23.36, 0.1% lower. How about HDFC Bank? Down 0.4%, 14.88. Let's look at Infosys, down 0.3%, 1398. What about TCS? It's up, even if marginally, 3382. This is what the index heavyweights are doing. The Nifty now slipping 50 points lower, 19,362. The Bank Nifty 150 points lower, 43,471. Now it's headed for the first support. I'm talking about the Nifty, which is at about 19,340. Let's pay attention to all FNO stocks beyond the index heavyweights. Keep an eye out on Bajaj Finserv, 1.2% higher, 1583. Exide is sticking away merrily, 1% higher, 269.75. Crompton, Vedant, Mudhoot Finance are the three other gainers as far as FNO is concerned. Where is the losses coming from? Bharat Forge, 3.5% higher, 1038. Remember, this dip is most likely an opportunity for long-term players to get back into the counter. Steel Authority, 2.5% higher, 8460. Divi's Lab, 1.5% higher, 3450. Bata, Siemens and Petronet are about 1% lower each. The Nifty now 60 points lower, 19,351. Remember, the first support is 19,340. Let's see whether that's touched or not. Let's look at the NSE 500 space and let's see where the winners are. Okay, Quest Corp, strong earnings, 4.5% higher, 477.50. Jamna Auto, 4.5% higher, 117. Gujarat State Petronet, 4.5% higher, 284.30. Stocks at all-time high, Sonata Software, Power Grid and Kalyan Jewelers. How about 52-week highs? Tata Elxsi, 1.5% higher, 79.41. And of course, we have Power Grid, 0.22% higher, 207.85. That is how the markets are. Akshay, to you first. Anything that you would want to do on the Nifty? Maybe 19,300 call on the long side, buying this dip?
Yeah, definitely the trend is positive once we had the break of 19,200 a couple of days back. But if you look at the start for today's trading session and the build up at the strike of 19,300, it just gives me a feeling that it's going to be a consolidative day, or at the best you can get a further dip of 30 to 40 points. So my comfort lies in timing the Nifty trade. I would be more comfortable buying it around the 19,300 to 19,320 zone, that is basis spot. So wait for slight dips before taking this buy trade. Maybe 30-40 points more to go for intraday trades in the Nifty. 19,300 puts have been written strongly for this coming weekly expiry, so that's your support base. And once it gets near the support base, that's where I would go aggressively on buying the Nifty index.
Okay, that's how the structure is. And I'd also like to get your attention on Akshay, Bank of Baroda. And the PCR at the moment will fire the 195 call on Bank Baroda. There seems to be some activity on the long side as far as this counter is concerned. Remember, we had seen a very sharp fall yesterday, down 4.5%. 195 call, is it on screen? We'll just wait for that to come. Akshay, your view on this particular trade at about 5 rupees, the Bank of Baroda call on 195 rupees.
Shailji, yesterday, if you look at Bank of Baroda, there was a lot of short bets which I noted in the fall in the futures and options space, especially 200 strike in call saw significant writing action as the day closed. So our resistance is one thing is clear that 200 is going to stay. Now today we are trading at that in day trading technical support, which is around 193, 194, where it currently stays trades. So maybe you have a small bump up at the best, probably 195 is what you can look at. So the 195 call, which you said might see a small uptick, but it wouldn't be a very strong rally and a contra trade to play against the trend. So I would not be very comfortable taking this trade on the long side for today, at least in Bank of Baroda. So I'll keep it on wait and watch and not take a buy trade at least for today in Bank of Baroda.
Fair point. Let's also look at a 19,300 call for Nifty, which is expiring on 9th of November. At the moment, it's 117 rupees. Remember, it's fallen about 30 rupees from yesterday's close, and this is something that needs to be looked at. The reason why I say that is that the first resistance is 19,340 on the intraday charts for the Nifty. Let's see whether it's tested or not tested, but this is something which one can look at. Tanya, what are you watching?
Well, I'm watching Gland Pharma. It's the top gainer from the pharma space. And if you see, the company has reported numbers So the profit came in at 194 odd crore rupees. It is down 20%, but we have seen a strong growth in the revenue. It is 30%. It came in at 1373 odd crore rupees, up around 32%. And of course, we have seen weak EBITDA margin performance coming in from the company. But coming to you, Mr. Kant, first for Gland Pharma. What are your thoughts on Gland Pharma, and if you would like to share any picks from the pharma space?
So we are largely negative with a booking profit bias. So a lot of the pharma stocks have seen a good run up, and it's basically valuation is the discomfort out there. If you look at the PE multiples where they are trading, most of them is well above 25, 30, with a visibility on an annual visibility of growth around 12 to 10%. So that is where the challenge is coming. Further, we believe that as far as the operating margins are concerned, we are seeing the best of the operating margins playing out now. Going forward, these margins will be compromised, maybe 50 or 100 basis point, but that should be the order for most of them. So it's primarily it's a profit-taking play which we are recommending to our set of clients. However, there are few outliers, and one stock which we are closely watching, let the result be out today, is a Zydus Life. So it's a niche play on the in the pharma space, more focus on the oncology and heart treatment of specialty medicines, and even the liver part where the fat gets deposited not through consumption of alcohol or non-veg but through a vegetarian diet as well. So it has drilled down to that kind of a specialty as far as medicines are concerned. So that is one stock, and it has corrected 20% from the top. We are looking forward to. Other than that, largely on pharma, neutral to a negative bias.
Okay. Coming to you, Akshay, for Hindustan Aeronautics, it is also up in the trade today, high beta stock. What are your thoughts, and what do the technical charts suggest?
Hindustan Aeronautics has a very strong chart structure, especially the longer term or the medium term charts are very promising. 1800 is the base which is setting up, and possibly the stock is heading for its recent swing highs, which we saw somewhere in the month of September. At 2100 is where you can target Hindustan Aeronautics. May be a temporary stopover at 2000, but keep a broader targets. 2100 should be on soon. 1850 is where the base is setting up. So I would recommend a hold, or even you can consider it a buy, but medium term should be better. Keep a bigger target. 2100 is where you can target HAL soon.
Okay, since it's the expiry, the weekly expiry of the Fin Nifty, Tanya, let's pay attention to the two stocks that matter. One is Bajaj Finserv. Coming to you, Akshay, what are the charts of Bajaj Finserv telling you? A fairly strong move, 1588 in cash, and it's the top gainer in the FNO space. What would you do? This is a swing trade in the making, so it seems.
Yes. So Bajaj Finserv has made a trading bottom at 1530, and it is setting up for an up move. The up move targets around 1680 from a week's perspective. As far as day trading goes, 1600 is where it might slightly resist, considering the fact that it's opened gap up today, and there's a lot of price volatility right now. It may take a bit of time to settle down, but the view stands positive. So you can place your trades on the buy side. For day trading, if 1600 is overcome, you can see the momentum pick up till 1625, 1630. So a positive view I'm sharing Bajaj Finserv, buy it for a slightly bigger targets if possible. Day trading is also good, and positionally 1670, 1680 is where you can target Bajaj Finserv.
And I think we should talk about Zomato Shell. Very strong block deals happening there. 2.8 lakh shares at 124 odd level. And it is in the green right now. Akshay, the company reported good set of numbers, but what do the technical charts now suggest for Zomato?
A very strong price structure, strong reversal seen from the base areas of 60, and this has the momentum to take it all the way up till its all-time high levels of 160, 170, which we saw somewhere way back in 2022. So I believe continue to hold if you have those stocks. 160 is the medium-term targets which I foresee. That's the all-time high for Zomato. If you want to take a fresh entry in Zomato, yes, a bit overbought, overstressed on technical parameters. So in case 120 is the dip you get someday going ahead, that's a fair entry price for a target of 160. 104, 105 is the base which it is setting up. And I maintain a positive view on Zomato for bigger targets. That's all-time high till 160.
Okay, absolutely. And I think we should also pull up Tata Elxsi. It is one of Vaishali's top picks yesterday, and it was shared in the afternoon market show yesterday. And now the stock has crossed 8,000 important mark. It is up 3% in today's trading session. So, coming to you, Akshay, for a quick technical check on Tata Elxsi, will the momentum sustain going forward as well?
Yeah, Tanya, today, especially in the first 15 minutes of trade, we have seen a positive breakout in Tata Elxsi. This breakout has been seen at the price point of 7936, and this is a rounding saucer breakout on the medium term charts. That's the reason you are seeing a strong pickup in the momentum in this script. So, from trading perspective, your stop loss is days low. The momentum has just begun right now, as I understand, and 8200 is your day trading or carry forward trading target. Positionally, this stock is heading again for 9250 to 9275 levels on the upside. So a positive view on Tata Elxsi. Continue to hold. You can also consider buying it fresh. Support is roughly around 7850. Stop loss will be below 7800. And 8600, 8800 is where you can target Tata Elxsi.
Wonderful picks, Tanya. Zomato up 2 rupees from the point you marked, 124.05 to about 126.15 now, and the block deals continue very, very high. And of course, Tata Elxsi now 81.01. Very, very strong moves coming in over the last 3 odd minutes that we've discussed this stock. So Tata Elxsi is up $100, and of course a 2 rupee move on Zomato. To you, Akshay, Bajaj Finance. 76.57, the day of the Fin Nifty expiry. What are the charts telling you on Bajaj Finance? Any option that you like?
Bajaj Finance, as I see it right now, has managed to break out of its day trading consolidative range, which was around 75.60, 75.70. So that's a positive development as it stands right now. And this gives me a day trading target is 77.50. So it's a positive setup in Bajaj Finance. If you were to take this trade using the option space, then I feel the best trade here would be to go for buying an at the money call. Probably 7600 is what you can look for if you're trading Bajaj Finance on the option space. Right now, as I see this 7600 call roughly trades around 140, 145. So that's the price you go to buy. The option price, if it goes to 77, 77.50, you will easily make a premium appreciation gain of around 25 to 30% from the current rates.
Okay, ladies and gentlemen, it's the time for defense counters to make a comeback and make a very strong comeback. This is led by Hindustan Aeronautics. A very strong move coming in here. The counter rallying for the fourth day in a row. The other stocks, Cochin Shipyard, Garden Reach Shipbuilders, and Mazgaon Dock, all up between 2.2 and 3.75%. To you, Akshay, which is the best which is the best defense counter in the shipbuilder space? Cochin Shipbuilders, remember, is rising only not only because of how the price action is, but there is a stock split in the works as far as the charts are concerned. Akshay, your top pick in the defense space?
Cochin Shipyard is one stock. Definitely, yes. It's a very positive opening. It has taken a breakout trade, which promises a target of around 1100. But specifically, Mazgaon Shipyard is one stock from the shipping space, which has seen a very positive up move today from the consolidation it has been in the last few days. So 1920 is clearly a base which it has set up. This stock is known for strong up moves once it kicks off. So, you can easily expect the level of 2070, to be revisited soon. The momentum has kicked off. So I would clearly take a buy trade on Mazgaon shipyard as it stands right now. Your stop loss will be your day's low point, and your target would be around 2040 to 2050 with a week's time frame.
Devyani International also, I think we should pull up that this stock as well. 4% higher, 196.95 is the level where we are at. Coming to you, Mr. Kant, for Devyani International, and then I will come to you also, Akshay, for a quick technical check. But first, what do the fundamentals suggest, Mr.
See,
Kant?
yeah, business is going as usual, and I mean, be it Devyani International, Sapphire, they all have been doing pretty well, even Jubilant Food. So there is no problem out there. Input prices have been supportive, so the margins are there in place, and their guidance as to the expansion is also on track. The only worry point of all these stocks at this the critical market juncture at which we are is the valuation part. So but that is uncomfortable, but it is likely to be so because of the scarcity premium these companies enjoy. At the same time, now we are going, I mean, the World Cup season would be over and the festivities will be also be over. So it will be a time for them to take a backseat. So I think some consolidation would be there in the offing. And I mean, the float is low as far as free float is concerned. So I don't see a sharp correction coming into play. Fresh buying will not be recommended unless you are having a time horizon of at least 2 to 3 years. If that is the time horizon, then all these stocks are very good, and Devyani is better off in the basket. So it's a pure fundamental investment play. It's a buy and hold. Otherwise, one should, for trading play, one should avoid it presently.
Okay, absolutely. And Akshay, quick technical check on Devyani.
On Devyani, as you see, day trading charts are looking good. So it's seen a positive break of the 190 level, which was a kind of a short-term trading resistance. This may see the stock pulling up to 200 to 202 as its best. So as I understand right now, with the momentum kicked off in the early half an hour of trade, 200 to 202. So it's more of a trading buy, which I would recommend, because once I went through the medium and long-term charts, still, there is nothing much exciting as I see right now in this chart. So consider it as a trading pick where it stands right now. 200 to 202 is where you target. In case of a risk management stop loss, 190 is the point, which would be your stop in this trade.
Okay, ladies and gentlemen, it's 9:34. Let's just take a broader view of the market. Both the indices are in a sideways to flat consolidating range. Nifty down 43, Bank Nifty down 161. There's nothing much happening. T-1 for Nifty Bank, and of course, 3-day rally on Nifty. Let's look at where the action is in the broader space. We look at the advance decline ratio first. On the National Stock Exchange, 1,100 shares are in the green, 800 in the red. Which is the top gaining index? It's the Nifty Pharma Index. Remember, in our pre-market commentary, we had mentioned that Pharma will make a comeback. 15,158 on the index, or 0.6% higher. Out of the 20 stocks in the pharma index, 14 are in the green. You have a nice uptick on the small cap and the mid cap 100 index, and it's the Nifty Realty Index which is the top loser, down about 1%, 645.45. Let's look at the Nifty 500. This is where the strength of the market is known. At the moment, the advanced decline ratios are perfectly 1:1. 262 stocks in the green, 235 in the red. That's how the broader markets are at the moment. Now let's look at some outstanding performances in the high beta space. You have the internet space ticking. Policy Bazaar is the top gainer today, 2.4% higher, 742. Very strong show on earnings by newly listed RR Kabel. This is a cable company, 1436 in front of you, 2.3% higher. Defense firm Idea Forge, 2.3% higher, 856. You have HBL Power, 1% higher, 311. Delivery, Zomato, all of them are in the green. Paytm flat at about 880. This is how the internet space is doing. Let's look at stocks which are in the news and trading fairly sharply higher. We have Suzlon, 3.5% higher, 37.35. Remember, a fresh 52-week high. We have Angel One down about 4%. Remember, this is a stock at an all-time high, but it's the pharma space which is taking it away. Akshay, to you, your top pick for today was Sun Pharma, which you caught pretty well, but it's now Cipla and Ipca Labs that are up 0.8 and 2.2% respectively. What catches your fancy in the pharma space?
Well, as you said, Cipla 2 is a good trading pick, which might target 1225. There is a strong resistance there. But a couple of names definitely where there is a very clear positive pattern. One would be Aurobindo Pharma, if you are considering it from a short-term trading perspective. So a good support base, 850, 865 has been built up, and the stock has launched itself to hit the upper end of the resistance band, which is around 925. So the long additions are seen in the derivative segment. Even in the option space, 900 call is noting strong long build-ups. So I would recommend Aurobindo Farm to consider from the pharma space from a trading perspective. 925 is where you can target. And Glenmark Pharma is one more name which comes to my mind. It's still support in the making. I think the momentum should kick off very soon in Glenmark Pharma, and 850 is where you can see the stock soon. 766 is the current market price. 750 is the base. So a very strong risk reward payoff which you get at the current level. So a strong buy on Glenmark at current rates with a target of 850 within a short term time frame.
And the stock is among the top gainers in the small cap space. Coming to you, Akshay, for Cochin Shipyard. The stock is back in action today. It is up around 3% as we speak. What do the technical charts suggest?
Yes, technically a very strong chart structure. If you look at the shipping companies, they have returned back after a pretty long time. These stocks have been known for volatile moves, and majorly these are upside as I see it from the medium term charts. So Cochin Shipyard, a clear support base of 950 in place. The momentum has just begun, and this can easily see the stock testing 1100 at least from a trading perspective. So right now, go for targets of 1100. I foresee 1200 also coming maybe in a month's time, but as it stands right now, you can work with a target of 1100. 970 is the support which is building up. A positive view which I hold on Cochin Shipyard for targets of 1100 for trading and 1200 for slightly longer term time frame.
Okay, let's spread our eggs, Tanya, and look at where the market is headed. I think it's the day for pharma, and this was picked up pretty well in pre-open trades as well as in Akshay's commentary. So Aurobindo Pharma is the top gainer, 891 in front of me. Very, very strong gains coming in Lupin. The counter still 0.5% higher, 1211. Again, Divi's Lab is the top traded counter, but a bit of a profit booking happening. Let's look at the charts of Aurobindo Pharma. Remember, this is, I think, the highest beta counter I have ever seen in my lifetime. And at the moment, 889.85. Akshay, would you have a view on Aurobindo Pharma?
Yeah, Aurobindo Pharma from the pharma space has a very strong setup as I see from a trading perspective, especially in derivatives. The out of the money calls 900 strike is drawing a fair deal of attraction in terms of the opening build up on the positive side. I foresee Aurobindo Pharma touching 925 soon on a medium term frame for the November series itself. So 875 is the base. It's a buy on Aurobindo Pharma. Keep a targets of 925, and you will see these targets happening soon for the November month itself.
That's a very strong view coming in on Aurobindo Pharma. Actually, there's so many stocks within this space that are moving. Zydus Life. Let's just see Zydus Life Sciences on the screen, 592. This is a great swing trade in the making after a very, very sharp fall from 665. Your view on Zydus Life, Akshay?
Well, I believe the day is for the pharma space, looking at most of the price moves in the early hour of trade. Zydus Life also has seen a strong positive uptick above 590 for day trading. That possibly sees the stock moving for 600, maybe today itself or maybe in the next couple of days' time. It's a chart, possibly a reversal in the making. Medium-term charts still are in the negative trajectory, trying to post a reversal. So as of now, the base building process is on somewhere around 575, 580. Right now, 600 is what I would look at for Zydus Life from a day trading or a carry forward perspective. Possibly the way the charts are spanning out, I think 625 should be on the card soon once this 600 level is taken off. So 625, work with those targets. 580 is the support, and a reversal candidate possibly in the making, which is Zydus Life Science.
Okay, ladies and gentlemen, with that, we'll thank Akshay. Thank you so much for your calls, Mr. Bhagwat, and here's wishing you the best of festivities that life has to offer to you, to your clients, and to everyone at JM Financial Services. Thank you for your time, sir. Cool. Let's get back to markets. At the moment, the Nifty at about 942 is down 47, and the Bank Nifty is down 119 at 43,423. A bit of a downtick coming on the IT as well as the Nifty 500 index, as also downticks on the Nifty realty space and the PSU banking space. So this is how the markets are structured at this point of time. But let's just see whether our corporate radar section is with us or not. We'll be shortly joined by Mr. Sanjay Lodha. He's the Chairman Managing Director for the newly listed NetWeb Technologies Limited. Remember, this was a very, very well taken IPO by the market, a very strong listing, and we'll shortly be focusing on the earnings of this particular company for the last 3 months. Meanwhile, Tanya, what have you been watching?
With us Mr. Sanjay Lodha from NetWeb Technologies, the CMD at NetWeb Technologies. So very good morning, Mr. Lodha, and always very good morning and congratulations first for a stellar set of numbers, stellar set of second quarter numbers. So the company has recorded 66% growth in its net profit at 15 odd crores, and the revenue is also up around 97% at 145 odd crore rupees. So good set of numbers coming in. I want to know it from you now that what would be the growth drivers going forward, and how do you plan to sustain this kind of growth?
Yeah, thank you so much. Actually, it has been a good quarter for us. As I had mentioned on my earlier, basically during the end of the first quarter and during the time of the IPO also, that basically our business is primarily cannot be viewed on a quarter to quarter basis. Basically, it is primarily more H1, H2 gives you more better picture, but a complete year will give you a much more better picture actually. So basically, it was a good quarter for us. We grew at a good pace, and basically year on year the growth was almost all double, and basically quarter on quarter also the growth was almost all 2.5 times. So basically, it has been a good growth for us, and plus we have a very good order book as well. We have around 217 crores of order book. Okay, and we are a funnel driven company, and we have a very good funnel also. So that is around 3,000 crores. Out of that, around 350 crores we already L1. So so basically the business pipeline looks very robust. And as I had mentioned very clearly, that 1/3 of our business comes in the first half and 2/3 of the business comes in the second half. So basically already done, we have done around 204, 205 crores. 217 crore order book we have, and we have a very good funnel. So we are very basically all set to completely go and achieve the 40% CAGR kind of a growth, which I have mentioned actually earlier, and hit a turnover of somewhere around 600 crores for the year end.
Right. Mr. Lodha, very warm welcome to you on Market Today on Business Today Television. Your IPO was priced at about 500 rupees per share, and you raised somewhere like 425 crore rupees. The listing was fabulous, and even now the stock has been outperforming more of its peers. Tell us the granularity of business. How much are the top 4 or 5 clients contributing, and how much has there been a shift in their percentage contribution to revenue?
Yeah, actually, the thing is that basically, if you see, our business is primarily very enterprise kind of a focus we have. We are not kind of a box pushing company. Our focus has been very clearly primarily on the supercomputing. The main area for the business for us has been supercomputing, private cloud, HCI, AI systems and workstations, and then basically storage and other things. So basically, if you see, the first two contribute for somewhere around 75 to 80% of our business. Supercomputing and private cloud is somewhere around 35 to 40% each, actually, and that has been maintaining. You know that both these segments are really growing very well, and the kind of traction basically the AI systems and enterprise is getting because of the large language models and lot of basically industry shift towards basically on the AI front. So we are all ready to basically take care of that. So basically that segment is growing, but definitely since the other two segments are growing, the growth is somewhere around 7. So basically in the total pie, the AI systems and workstations will be around 7 to 8%. As regards our large customers are concerned, 50% of our business comes from the government, and around 50% of the business comes from the large enterprises. We are primarily present only into the large enterprises actually. So I think that ratio is still maintained. I think this time also, if you see the results, I'm not very clear, but somewhere around 52% business came out from the enterprise segment, around 48% came from the government. So the same is the situation there, and the large customers which we have been supporting us very well, and the kind of requirements they have is really fabulous. And we see basically the growth from the large customers coming up very well. New customer acquisitions are also on cards. A lot of new deals, lot of new customers we are getting, and basically, as you know that we were very successful in PLI 1.0, and now since basically we were among the very few who had claims has successfully completed the targets there. So the new scheme from government, which is expected in very shortly, PLI
right, Mr. Lodha, if you would let us at least ask questions.
Please go ahead.
So, Mr. Lodha, I just wanted to understand from you that I was going through your investor presentation, and you have mentioned that India has significant potential to seize the opportunities presented by the growth of large language models and the widespread adoption of AI across businesses worldwide. So I want to understand from you now that how is AI contributing in the growth of your product lines?
Yeah, actually, basically, really speaking, supercomputing and AI are both very closely related. So basically, we have been working with NVIDIA since the time basically NVIDIA GPUs started being used for computing, maybe year 2010 and 11. So we have a very deep expertise in that segment. Our systems are very clearly designed so as to support the various kind of GPU and accelerators which are needed. That is there, and plus basically we have a stack, basically completely Make in India stack, which completely helps to us to scale up the AI and LLM kind of applications. So there is a lot of traction which we are seeing, and people are trying to basically take advantage of that. So that will definitely help us to boost our sales on the AI systems and workstations as well. But as I mentioned earlier, what happens is that our other segments are growing. So you will not see the basically AI systems and workstation immediately taking a big percentage inside our entire portfolio. It was around 7%. We expect that over a period of a year, it can go up till maximum of 10%. And that's how we are looking at it. So on the AI side.
Right. Mr. Lodha, let's shift focus on EBIT margins. Of course, you've seen a sharp rise in top line as well as bottom line, but why have EBIT margins fallen so sharply, about 480 basis points to about 13.3%? What was the reason behind this fall?
Yeah, actually, basically, there has not been a major fall. The reason is basically we have been giving ESOPs, and ESOPs has taken basically because of the ESOP grant. Basically, this has taken some kind of basically on the EBIT margin. But I have always indicated my gross margin to be in the range of 27-28%, though it was higher last quarter. But basically, that and also I mentioned that it is higher because it may be some orders might have got us better margins. So we will maintain basically as regards our gross will be always 27-28%, and EBIT margin will be around 15%, and our PAT will be 10 to 11%. It has been, if you see our track record, I mean, we have been very, very consistent in that, and basically we are very confident of maintaining the same.
No, I'm asking why did the margin fall?
Because we granted ESOPs actually. ESOPs, once we granted ESOPs, that took a toll on that actually.
Okay, that's a fair point. So it's a one-off. That's not a problem. So 15% is what you hope to achieve as far as EBIT margins are concerned over the next couple of quarters.
Correct. You're right.
Fair point. Okay, you've mentioned that the pipeline is worth 3,000 crore rupees in terms of order inflow. How much of this order inflow came in the quarter that we are discussing?
Yeah, actually 3,000 crore is the total funnel which we have actually. Basically, it's not the order inflow. Order book actually grew from somewhere around 100 crores to 217 crores actually as regards the order book is concerned. But basically the pipeline which I think around 400 to 500 crores was increased into this pipeline in basically between the last quarter approximately. So basically the pipeline keeps on building up and the order inflow happens. But if you see very clearly in our presentation, we have mentioned that our 3,000 crore is our pipeline. Out of that, we already L1 in 300, around 350 crores. So that those orders are expected between the next quarters. So basically that is there, and plus basically more will be added to the pipeline. So that's how it works.
No, Mr. Lodha, let's get this right. How much of fresh order inflow happened in the past quarter, and what is the existing order book?
The existing order book is 217 crores. The last quarter, our order book was somewhere around 100 crores, which already got billed out. The total order inflow in the current quarter was around 200 crores approximately. So the current order book is 217 crores.
Okay, and where does this 3,000 crore rupee number come from?
3,000 crore rupee, I'm sorry basically for getting you confused, but 3,000 crore is our total, because basically if you really see, we are a funnel driven company. Our order book, the time between the order placement and execution of the order is somewhere around 10 to 14 weeks. Okay, so basically whatever 217 crores you are seeing, that more than that will get billed in this quarter itself. Okay, so basically our company cannot be judged on the term of the order book actually, in really speaking. What we do is that we have a running funnel wherein basically all these we are proactive sellers. We work on cases, basically we're on the new innovative solutions, and then try to basically pitch in, and then the order comes in. So the active funnel is very, very important for us. The total funnel, the pipeline for us is around 3,000 crores. I hope I'm able to make it clear to you.
Mr. Lodha, we'll stick to one number, 217. That's what the market is looking at. Let's just not confuse investors in terms of what has been executed. So 217 is what we will go with. Now, coming to the geographical setup of your client base, have there been any fresh additions? Are you targeting any fresh geographies, in India or overseas? What are the new business lines that you are targeting?
Yeah, as first to answer your first question on the geographies, actually, we have around 16 offices all spread all across the country. We cover almost all the A and B class cities directly. So basically, I don't think there has been any particularly addition as regards local geographies are concerned. As regards international geographies, definitely we are working to approach various markets and we are having very good traction on the product side. We are building it up and slowly we will have overseas operations as well. As regards the new product side, basically there are the two lines which we are trying to get in. One is basically on the networking switches side, because networking enterprise grade networking switches has got a huge scarcity in the country. There are very few local manufacturers, and there is a lot of traction on the networking switches, because basically security, for the security concerns, the government always wants to promote, even US also wants to promote local manufacturing on the switches, and at this point of time there are very few manufacturers in the country. So we have a product line which is ready and which will be launched this quarter itself. That is the new addition product number one. The number two, we are working on a complete Make in India 5G O-RAN solution. That's a very unique kind of a solution, and we are among the very few who are trying to do it. We already have a completely hardware design and the complete stack for the complete Make in India O-RAN, which we plan to launch maybe sometime by end of the next quarter. So these are the two product lines, both which are very innovative, and both the products will be added basically this financial year, and they will definitely add to our portfolio.
Right. Mr. Lodha, my final question to you. Although you are not impacted by the attrition rate which is there in the software industry because you are a part of the hardware sector, but if you could just share the broad trends that are happening. Was there an attrition that seems to be worrying to you, and what was the net number of new people that joined NetWeb Technologies?
Yeah, so basically, first thing is that we are not only a hardware company, we are a hardware and a software company actually, because we are a very unique company which does not only manufacture hardware and sell boxes, as I told you initially. So we basically, the complete supercomputing hardware is designed, manufactured by us in India. The entire software stack is made by us, so we have zero dependency on third party. So we are a hardware plus a software kind of a company. As regards your question on attrition, definitely we have been able to win over that, and it was somewhere around 10% approximately earlier, which has come down to around 6% now. But with basically, again, the 6% is primarily more on the lower end side. On the mid level and higher level, we did not have any attrition actually. And around 24 people joined us basically this quarter. So we have a total strength of somewhere around 300 people now. And we have more than 30 to 40 new vacancies where we plan to join people. We expect to join in around 70 people in the next 2 quarters.
Okay, absolutely. Got that. And on that wonderful note, Mr. Lodha, thank you so much once again for taking the time out, for sharing these valuable insights with us, and all the very best for the coming quarters as well.
Thank you so much. Thank you.
Okay, absolutely. So, Shail, I think, I was going through some of the stock picks as well. And the stocks picks which you pointed out, which our guest pointed out, I mean, look at GSPL, Aurobindo Pharma, Gland Pharma, Zomato, Tata Elxsi. I mean, so many points that, our guest pointed out, you pointed out. So what a fantabulous day for the stock picks. And now I think we should shift our focus to the Mamaearth listing. So Honasa Consumer, the Mamaearth parent, is all set to debut on the bourses today. And I think let's just go across to the listing ceremony.
For the beautiful Honasa family. जी बिल्कुल 10 बजने ही वाले हैं. We are on standby, ladies and gentlemen. Shri Ashish Kumar is currently briefing everyone on how this goes, because it's our first time, as you all know. Now, this is what we're going to do. The final 10 seconds, I know you all are playing paparazzi right now, but the final 10 seconds you have to count down with me, all right? Please make sure you count down with me as loud as you can. We've got 29 seconds to go, almost there. A proud milestone for Honasa Consumer Limited to see itself listed on the stock exchanges of India. And we begin, or rather we do this, in 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1! Woo!
Okay, absolutely. So that was the listing for you, and the shares actually debuted at a premium of 2% at 330 odd level. So, Shell, over to you. The final issue price was 324 rupees. And what do you think of the listing, Shell?
Tanya, I think the stock should slip in trade. It's a very pleasant surprise that it's listed at a premium, even if it is 2%. Let's see how the day pans out. But like I said earlier also, in terms of parameters at which the market watches listed stocks and listed performances, this was way overpriced as far as reality is concerned. Let's see how it pans out, and good luck to all those shareholders who got the allotment. Let's see how the day proceeds. At the moment, the price that I see is 327 rupees, 328 rupees, up 4 rupees. So it's this is how it is. Let's see. The day is still young, and we are at about 10 a.m., 10:02. Let's see how it pans over the next 15-20 minutes. To you, Tanya.
Absolutely, Shell. I think let's just wait and watch, and let's see how the action pans out going forward. But thanks for your time, and thanks for sharing excellent data with us as always. So with that, it's a wrap on Market Today, but you don't have to go anywhere. You just have to stay tuned to BTTV. Lots more coming up for you. So stay tuned, and many thanks for watching.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is our Diwali special offering, Market Guru, a show where you actually hear from the best of the stock market experts on where to invest, how to invest, and what to really do if you really want to make money from equity markets. My guest on the show today is Gautam Baid, founder and managing partner at Stellar Wealth Partners India Fund. The fund is based in the US and invests in listed Indian equities with a long-term, fundamental and value-oriented approach. He's also the author of bestseller books as well on investing. The first one he wrote was on the joys of compounding, which was an international bestseller. While the latest one, which I'm also reading currently, is The Making of a Value Investor and What a Bear Market Taught Me About Investing by Gautam Baid. Welcome, Gautam, and thank you so much for taking the time out for this discussion, and season's greetings to you.
Thank you so much, Sakshi. I wish all of you and your viewers a very happy Diwali.
Thank you so much, and we wish your entire team as well and your family members a great Diwali. You know, the best Diwali gift that you can give all our viewers is the advice that they seek from you. As somebody who's been watching, looking at the markets for decades now, you know, you've seen all the ups and the down cycles in the markets. You've learned so much, and you've documented them in both of your books as well. So this is what we want to seek from you in this next half an hour that we will be discussing with you. So let me start off by first asking you, you're approaching Diwali and, you know, we'll be soon entering the new Samvat year. What were some of your key learnings from the year gone by?
I think one of the biggest learnings of the year gone by is that if you want to do very well in the small cap and mid cap space, then you need the market cycle, that is liquidity, in your favor. Because however good a stock picker you may be, however good stocks you may pick in the small cap and mid cap space, unless you have the force of liquidity behind you in terms of flows, you can't really get the necessary stock price appreciation. So because of this big surge in domestic SIP flows, in September we got 16,000 crores of domestic equity flows. Because of this big surge in monthly inflows from domestic institutions, the small cap and mid cap stocks in general have done pretty well. And on every 10 to 15% dip in the prices of a good quality small cap or mid cap business, you see buying immediately coming in. So I think that is the way to go from here for the next decade. That's going to be the mantra for success to become a big investor in the Indian stock market. You want to be with quality.